Hi, and welcome to this edition of the Options Learning Center. My name is Rick Orford, and I've been a stock and options trader since 1999. And today, I'm excited to show you how to sell short call condors and use bar chart to get the most out of the strategy. A short call condor is a directional options trading strategy that involves buying and selling 4 call options, each at progressively higher strike prices on the same underlying asset and the same expiration date. The result is a combination of a bear call spread and a bull call spread, and works best when you expect the underlying asset to have significant price movement. To set up the trade, you'll sell a call option at one strike, then buy a call at a higher strike, buy another at an even higher strike, and finally sell a call at the highest strike. The result is a combination of a bear call and a bull call spread that creates a short call condor, resulting in a net premium, also known as a net credit. To achieve maximum profit on the trade, the underlying asset needs to trade below the lower short strike or above the higher short strike at expiration. Maximum loss occurs if the underlying asset trades between the long strikes. Finding short call condors in the market can be time-consuming. Thankfully, platforms like BarChart allow traders to screen the market for different options trading strategies. The first thing you want to do is go to barchart.com if you aren't already there, and then click on Options, then Short Call Condor. From there, you'll be brought directly to the results screen. Here, you'll see all the trades that fit the default criteria for short call condors. You'll also find information about the underlying assets, strike prices, premiums, profit and loss points, as well as the probability of loss. Each column can be rearranged from highest to lowest or vice versa by clicking on the column header. And that makes it easier when you're looking for the best trade for a certain metric or condition. Now, if you want a more customized search, look for Set Filters at the top. Once you click that, you'll be brought to the options screening page where several default filters and values are already in place for short call condor spreads. But if you want to add filters, you can easily do that by clicking on the Add Filter field, typing in your preferred filter, then click Add. If you're not sure what filter you're looking for, you can also click the drop-down to choose from dozens of other filters. Just select what you want and click Add. Now, to delete any of the filters, click the checkbox next to them and hit Delete. So I'll do that for the ones that I just added so I can stick with the default filters. There's not much to change here since the default provides a healthy balance of opportunities. Of course, you can expand the search by adding weekly expirations as well as ETFs into your results. Now, I'll scroll down to the bottom where I can find the probability of loss. As the name suggests, this measures the chance of the trade losing money, even by just a penny. So it's a pretty good filter to consider. Lower probability of loss means a lower potential profit, but a higher potential of loss in terms of dollars and cents. For this video, I'll set it to less than 20% probability of loss, and then I'll click on See Results. Okay, so now we have quite a range of trades. I'll now arrange the results from highest to lowest in terms of maximum profit, and then I'll pick the top one. Now, before we discuss the trade, I want to show you how to save your screener so that you can reuse it later. Just click Save Screener near the top right, and then type in the name of the screener. You can also have BarChart email you with trades that match your filters on a daily basis. Just click on when you'd like the email to arrive. It's that easy. Okay, so let's move on to a trade example. First on the list is a short call condor on Tesla. The stock currently trades at $257.02. For the bear call side of the trade, you'll sell a $235 strike call for $37.15 a share, and buy the $240 strike call for $34.35. On the bull call side, you'll buy the $260 strike call and pay $24.05 a share, and then sell the $265 strike long call for $21.75 a share. This trade will result in a net premium of 50 cents per share, or $50 total, while your maximum loss is $4.50 a share. The trade has a 9-to-1 risk-reward ratio and a 19.1% probability of loss, with all options expiring on November 15th or in 46 days from the time of recording. Let's get the break-even points on the upside and the downside for easier trade calculations. To get the break-even points on a short call condor, first add the net premium to the lower short call strike. For the upside, subtract the net premium paid from the higher short call strike. So that makes the break-even points $235.50 on the downside and $264.50 on the upside. Now that we have those details, let's go ahead and break down the trade. If the price of Tesla stock moves beyond the short strike prices at expiration, you get to keep the maximum profit. The maximum profit is calculated by subtracting the premium paid from the premium received to set up the trade. To recap, for this trade, it works out to 50 cents a share or $50 per contract sold. However, if Tesla stock does not experience any significant price movement before expiration, you'll enter the maximum loss condition for this short call condor. To calculate the maximum loss, take the difference between either spreads, which is $5 in this case, and then subtract the credit received. That works out to $4.50 or $450 per contract. Here's a profit and loss chart with different prices at expiration, just to illustrate how short call condor trades work. The profit zones begin just beyond the break-even points, and maximum profit occurs when the stock trades above the short call strike on the upper end and below it on the lower end. And maximum loss will occur when the stock trades between the long call strikes. So that's screening the entire market for assets to use in short call condor trades. But what if you have a specific stock in mind? Well, that's also easy, and I can show you how. First, go to barchart.com, then search for the asset using the search bar. For this example, I'll look for Micron. Once on the stock's profile page, navigate to the left-hand side and look for Condor strategies. Then, click the Short Call Condor tab and you'll see the default search results. You can click on the drop-down to change the expiration dates, change trade legs, rearrange each column, or click the Screen button to reach the option screener page for a more granular search. And that's it. While the point of a short call condor is to achieve maximum profit, it's best practice to close your trades right before expiration to avoid assignment, especially if one of your options are in the money. For this example, you have two short positions in the trade, and if either of them are in the money at expiration, the option will be automatically exercised, or in your perspective, you'll be assigned. Short call condors have limited risks, making them great for risk-averse traders. The profit conditions are also range-bound, meaning as long as the underlying price moves beyond the short strikes, you'll achieve maximum profit. However, short call condors, like all spreads, have limited profit potential, even more so compared to their long condor counterparts. Also, like most short spreads, they have high risk-to-reward ratios, which means you can lose multiple times your credit. Finally, the strategy requires a volatile trading environment to turn a profit. Short call condors can be an excellent way to get paid in volatile markets as long as you find the right time and asset to use. It does have some drawbacks like limited profitability and high risk-reward ratios, so it's best to utilize all available resources, including options scanners, to maximize your chance of success. If you need more information, visit the Barchart Options Learning Center, where you can learn more about all of the other options trading strategies, how they work, and how to profit from each of them.